The dollar was worth $1 from 1776, when the country began, to 1913. It didn't change much during the Great Depression or the Civil War, but a dollar is still a dollar. There was no such thing as rising prices. The Fed was set up in 1913 by rich families like J.P. Morgan, John D. Rockefeller, and some members of the Rothschild family in London. Their only goal was to keep control of money. Because Baron Rothschild said many years ago, "I don't care who makes the laws. I am the law if I print the money." It has been known for a long time that the central banking system is fundamentally flawed. It constantly takes money from hardworking people to help a small group of elites. This system supports the fiat money plan, which is likely the biggest and longest-lasting financial scam ever. A lot of the founding fathers were very against the idea of a central bank because they thought it would be used for gambling, manipulating money, and being dishonest. George Washington wrote in a letter to James Bowen, the 47th Deputy Governor of Rhode Island, that paper money always hurts business, puts the honest down, and lets all kinds of fraud and wrongdoing happen. In the same way, Thomas Jefferson thought that banks were more dangerous than standing troops. He said that using paper money to pay for future expenses was like ripping off a lot of future generations. He also said that paper money was like a ghost of real money that disappeared into thin air and made people poor. In the same way, John Adams thought that all of America's problems, confusion and grief were caused by paper money. This is still thought today in the global context. Even though these warnings were given hundreds of years ago, the world is still plagued by this crooked system that keeps wealth gaps going. Famous hedge fund manager Mark Yusko recently talked about how the current financial system is very flawed on the Advancing Our Church show. He also talked about how the honesty and openness of blockchain technology are very different from the current system. In history, there has only been one money of the world, really. To be fair, many tries have been made, but only one has lasted for 5,000 years gold. What do I really mean by that? In this case, money is an object that doesn't have a liability attached to it. Everything else we think of as money is really just a currency. They are backed by government debt. So there are now euros, dollars, yen, and whatever else. The drachma is no longer used, the euro has taken its place. That's money, but gold has been money for a very long time, right? It doesn't matter if you're in Cleopatra's time, the 1920s, or Savile Row today. If you have a single ounce, you can trade it in for a nice suit. It has been a great way to keep money safe. And the money, the paper money. Since the 1300s in China, there have been 775 different paper currencies around the world. 3/4 of them were gone. They just disappeared because when governments owe so much money, the kingdom falls apart. Britain, the Ottoman Empire, and the Roman Empire. There is still a Britain, but a single pound note from 360 years ago would buy a sterling silver. A pound note today costs 174 pounds of solid silver. So that loss of value is what keeps real money alive. But there's a catch with gold. Let's say I had a bar on hand. Now, if I were Kyle Bass, everyone knows Kyle, I would reach under my desk and pull out a 26-kilogram Australian gold coin that he keeps in a safe there. Maybe I could break that in half and send you half, but I'm not strong enough to do that. It's not easy to divide. I couldn't put it in the computer and send it to you, even if I knew how to break it. That means it's not very useful. Gold, on the other hand, is scarce, so the amount of gold that is lost or stolen each year is about equal to the amount that is introduced each year. That means there is still a lack. Because of this, scarce goods keep their value. But the ability to divide and carry are better. That's what I think Bitcoin will be for the next 5,000 years. That was a really long answer to the question, why do I care about digital assets? What's up with me being so old? Value comes from scarcity, and it's because they are sure. One problem with our money, the dollar, is that there is something called the Federal Reserve. I always joke that it's not federal and doesn't have any reserves. When we think of a bank, this is not what we see, which is kind of strange, but it's a private company mostly owned by Europeans. So wealthy people in Europe. It was made in 1913 and was based on the Bank of England, which was based on the Dutch National Bank. It was made in the 1600s by a group of European families. It is also possible for a central bank to make money appear out of thin air. Now hold on a second. Isn't that bad? I have a stack of $1 billion here. What happens to the value of my old stack when I make a new stack of $1,000? What was cut in half? It was Thomas Jefferson who said it best, right? If you ever give money to a private company, your grandkids will wake up on the shores of the land that their grandfathers took over broke. In this case, it's true because you have to dig something to make it without having to work for it. You need to find it. You need to look for it. You need to mine it. You need to smell it. You need to do something called proof of work with Bitcoin, right? There are costs involved. You have to buy a machine, use the algorithm, pay for power, and put in work. Also, this is one of the smartest ideas ever. When you think about all of life, that's a big claim, right? Everything, right? Getting value from energy. While you make a show, you eat, right? You feed your mind, and then through your work, you make something valuable. If we give money to our church, right? We're giving our money time and skills, okay? We're turning energy into something useful. That's what life is all about. So things that go against that are not good for creating real value. And get off zero has been one of my hashtags for the past 7 or 8 years, okay? What does that mean? It means that giving Bitcoin and other digital assets no money is the wrong amount. For the first few months of this journey in 201314, I didn't fully understand it. The story is true. The Winklevoss twins and I both learned about Bitcoin in the same month. As you can see from his great work Bitcoin Billionaires, Ben Mezrich is a great writer. It's simple to read. You could read this weekend. That's great. What a wonderful story. But they have a lot of money and I don't. Why? They got it then. They were younger. There was no business that they had to be tied to. I got the idea when this good friend of mine told me about it, but when I got to work and wrote about it for my clients, they told me I was crazy. Do your job again. If you talk about magic money on the internet, you will be fired. It cost $186 instead of $500. From March to September 2014, this happened. It was like, oh, they were right, it was $1,000 after 8 weeks. I think, no, there's something here, what is it? How does it keep being so strong? It would drop, then rise again, and then drop again. Every time it did that, the highs and lows were higher, and the value of the network went up. I learned more about this idea of network effects after that. Also, there's a person named Sarnoff who made something called Sarnoff's Law. That means I could listen to WGN radio in Chicago when I was a kid in Seattle, right? How is that even possible? That's about 3,000 miles away. How is that possible? So they had this huge antenna that would send out this magic signal. It would bounce off the air and I could hear it. Sarnoff came up with this rule that said all networks were equal. It said that a network's value was equal to the number of people who could hear it. That's why he said it was a straight line. If both you and I heard it, it went up to 3 and then 4. If no one heard it, it was 3. Then Metcalf showed up at MIT and said, okay, that's fine. What if Jim and Mark did talk to each other? What if they connect with each other? It's not a straight line though. This time it's an exponential link. And to show the difference between linear and exponential, I used the fact that it takes 20 linear steps to get from one side of the room to the other. There are 20 steps that will take me around the world twice. Can't believe it, right? That's interesting. So the growth of networks is exponential.